In this video, guys, we're going to look at what is the difference between a long and a short trade. If you're a beginner, stay tuned. Hey traders, warm welcome to you. All right, so what's the difference between a long and a short trade? You might have heard traders say, I'm going long here, I'm going short here, I'm long this, I'm short that. So what does it actually mean? So really it's two opposing viewpoints of the market. If you are in a long position or about to go long, you are buying in anticipation of that market increasing in value, and that you'll be able to sell that trade at a later point in time for a higher price than you've paid. So let's say you go long at 100 and it goes up to 110, whatever asset it may be, you are making $10, 10 ticks, 10 pips, whatever you're trading on the asset, you've made money. Now short, going short, being short, getting short, however you want to phrase it, is completely opposite. So in other words, you are selling something with the expectation that that market or asset will decrease in price and you can buy it back later at a lower price. Now, that might sound confusing, saying how do you sell something you don't already own? And yes, it can be for the beginning, like it doesn't make any sense, how do you get your head around it? But effectively, without going into kind of massive depth here, you are literally borrowing that asset and then selling it. In the case of a stock, you're borrowing the asset and then you're selling it and then you're buying the asset back and you're repaying it. However, that's the technicalities. You don't need to worry about that. If you're trading with a broker like the channel sponsor, like come out the link in the description below, you are trading with them as the counterparty. And when you're taking a short, you're trading a CFD, for example, you're literally just saying, okay, it's a contract that says I will pay the difference between what the entry price and the exit price is. If you're short, the price goes down, they'll pay you the profit. If you're short and the price goes up and you lose on the trade, you pay them the difference that just comes out of your account. So you don't have to worry about the mechanics of stuff. And it also depends on what instrument you're trading. If you're trading a stock, then yes. But if you're trading a currency pair, really all you're doing is buying one currency and selling the other. Again, forget about the intricacies for now. If you want to find out more about it, I've got more videos on the channel. We're going into details of how it all works. But of a basic overview, if you're bullish, i.e. you expect the price to rise, you're going long, you're buying, you're selling at a later date. If you're bearish and you expect the price to decline, you're selling it and then you're buying that asset back. So your net position will be minus whatever it is, then you're buying it back, going back to zero. And by the way, if you didn't know, bullish on bearish comes from bullish, bulls attack by pushing up with their horns, hence the rise in price expectations, and bears attack by pushing down with their paws, and that's why he called bullish or bearish. Any other things to look for, guys? Losses are unlimited when you're going short. Be careful of this. If you're shorting something, the market can go higher and higher and higher and higher. You think about a chart, it can only go up and up and up and up and up, or it can go up and up and up. It can only go to zero. So your losses are completely unlimited when you're going short, unlike a long where you know what, you can go to zero. If it goes to zero, fine. Now, there's a small extra kind of asterisk I want to put on that and say that some markets, very recently, we have had a situation where crude oil, for example, on a specific futures contract has gone negative. So you've got to be very mindful, as with anything, guys, you've got to understand the market and the instrument you're trading. And if you're trading a stock, for example, if you're trading Apple, if you're trading any of those other things, they can't go below zero. So you understand the instrument you're trading, of course, with whatever you're trading, but your gains are limited as well with long. The good thing about being long is something can go up and up and up and up and up and up for however it goes. And we've seen this with some of the cryptocurrencies, for example, extreme moves. We've seen this with some of the tech shares at the moment. We even see it with some of the currencies from time to time. You know, they go overextended for very long periods of time, then come back in. So your gains are unlimited when you're going long. And also the other thing to remember is your position value increases as the market rises. So if you're trading a CFD, for example, you're just trading a number of contracts for difference, but that has a notional value. If the notional value of that, let's say, is $100,000 at the start, and the price doubles, all of a sudden your notional value of the position has doubled. And so you're in a bigger position, but the market's going your way, and so a percentage move as the position has doubled is going to be much more for your bottom line than it was at the beginning of the trade. The other way around with the short, if the short's going against you, same kind of thing, your notional value is increasing, and so you're getting more and more hurt as the position goes. And also, as the position goes in your favor, the notional value is decreasing, so percentage moves become less of a gain on your P&L. Just something to remember. I mean, that's only really relevant if you're swing trading over a long period of time, but still something to be aware of. But in the day, guys, very useful tool being able to go short, a very useful tool being able to do both, because there's time and a place for both. And if you're an active trader, you're going to want to use both, whatever market you're trading. There are some markets you might say, here, I'm only going to trade long on this. And you might just say, that's all I'm going to do. And that's fine. That's the beauty of being a retail trader. You can choose to do that. And there are other markets, trading some of the bigger currency pairs, where you've got spells where it's going to be very, very good short opportunities, very, very good long opportunities. So long and short, different ways of trading, different outcomes that you're looking for, different ways to make money as a trader. Don't forget to check out our channel sponsor. I'll see you next one. Take care. Bye-bye.